So, Coinbase is obviously a very popular company. It's a huge crypto exchange. It's the biggest in the US and the second biggest in the world, and it IPO'd last year, or actually direct listed, but it came to huge fanfare and was a top pick for many investors here on YouTube. In this video, we're going to discuss Coinbase, the company, the stock. We're going to look at why the stock has crashed. We're going to give an intro into the company, cover what happened with the IPO, what happened in 2021, explain everything that happened, and just give my 2 cents on the company and what's really going on behind the scenes. Now, for those of you who don't know, Coinbase is obviously a crypto exchange. It's a place to buy and sell different cryptocurrencies like Bitcoin and Ethereum. It's based in the US. It's the second largest crypto exchange in the world. It comes from Silicon Valley, as so many other hyped up tech startups do, but it's been around for years now. If there were legacy crypto companies, blue chip companies like Apple is of the tech world, then Coinbase would be one of them. It's run by Brian Armstrong, a very sophisticated, smart, brilliant businessman who has had loads of success in this area and in Silicon Valley in particular. Now, the company has a really strong market position. As I've already said, it's the most popular exchange in the US and for Americans in general. Binance is, of course, the biggest exchange in the world, but it's been seen as a little bit dodgy. It used to be based in China. There are some accusations of collusion with the Chinese state until it was finally kicked out of the country and it's now looking for a base. Binance doesn't even have a headquarters at the moment. So Coinbase is supposedly the more reliable and legitimate crypto exchange, the safer place to buy and sell your cryptocurrency. The idea here is that the company was supposed to grow into the Charles Schwab of crypto, whereas Binance would be something like Webull and maybe FTX would be something like Robinhood. Now, the site itself is actually really good. There is quite a lot of different crypto trading offered, a few hundred coins I think, but it doesn't have the largest selection at all. The company does chase trends a fair bit, like Dogecoin, to try and profit off of those peaks when they come and go. It actually has a really nice UI. It's got a really good app. It's very easy to use and very accessible, especially for people who are new to crypto. If you go on something like Binance or FTX and you don't know what a crypto trading pair is, you might be really confused by what you're seeing, but Coinbase finds a way to make it far more friendly for new users. Now, last year, Coinbase announced that they would go public via a direct listing, which isn't technically an IPO, but I'm just going to call it an IPO anyways, because it's just a little bit easier. The intricacies into why they went into a direct listing is basically because they didn't need to raise money for the company themselves, but they wanted to allow early investors and people who worked at the company to sell some shares to diversify a little bit, to cash out. And a direct listing allows people who own the company to sell shares directly onto the market, whereas an IPO is the company itself releasing those shares onto the market. Now, a direct listing is usually considered to be a bit more democratic. It's easier to invest in a direct listing than it is an IPO. You might need to contact an investment fund to buy into an IPO at its actual opening price, whereas with a direct listing, you're sort of all on the same playing field. Now, while this was happening, there was loads of attention on the crypto sphere at the time. There was loads of hype. Bitcoin had been a little bit low the year before, but it pumped up 500% in the months prior. Newer coins like Cardano had pumped up 10x as well. The market was hugely successful, very bullish. Lots of people were making lots of money and the industry was growing, and people wanted to buy Coinbase because of the hype around the crypto industry as a whole. Now, on YouTube in particular, it was very hyped up. I remember specifically the Millennial Money podcast, which is a podcast on YouTube with Meet Kevin, Andre Jick, Jeremy from Financial Education, and Graham Stephen. And they generally just talk about investing and things. And I think every single one of them bought Coinbase at or near its IPO price, thinking basically that it would go to the moon. Now, this was a very common thing to think back then. Cathie Wood bought it too, the queen of hyped up tech stocks from the Nasdaq, of course. Basically, take someone who likes Tesla stock, take someone who likes huge earnings in the future, speculation and growth into the moon, and they were probably excited about the Coinbase IPO. Now, in the days coming up to its actual listing, there was so much support that the starting price of the company actually increased and the valuation ended up being in the $60 billion range, which seemed like a lot to a lot of investors, and most institutional investors thought it was too high. Now, the reason retail investors had such a strong feeling about it was because it actually had really good earnings. It had a very low PE for that kind of company, so some people thought it was undervalued, especially compared to companies in a similar sphere. When a supposed tech company like Peloton trades at a PE of 80, but an actual tech company like Coinbase trades at maybe a PE of 30, people saw it as a bargain. Now, on IPO day, the stock boomed at the open. It rose to above $400 a share. I think it actually hit about $410 or maybe even $420 a share and was valued at about $120 billion for a few moments. But then the stock started to fall, and after the first day, it closed down about 20%. Now, lots of day traders played the hype and made money on it. They bought in right at the beginning, let the retail investors see it peak, get drawn in by the FOMO, and then they sold out. The trend for the first few months of the company since listing, though, was definitely downwards, and it declined for those first few months, eventually settling in the $220 to $260 range, which from its opening price of $380 was really quite poor. Now, come the latter half of 2021 and the second crypto boom started, and Coinbase posted another really good earnings report, so the stock started to rise, and it rose up until it reached around about $350, but it never really reached its IPO price in the first place, and once it actually reached that point, it then started to decrease again. Now, it's at this point that valuations for hyped up tech companies and Nasdaq companies on the whole started to decline, and it's now seen a solid 3 months of declines. Coinbase is currently sitting down about 50% from its second peak around $350 and about 60% from its all-time high. Now, funnily enough, I actually made a video back when Coinbase went public. It's private now, thankfully, because it's a pretty awful video, to be honest. But in it, I detailed my reasons for being bearish on the company and why I thought it was overvalued. Now, I am probably actually going to republish that original video for my Patreon viewers, but I have to warn you all, the quality is awful because it was one of my earliest videos, so please don't expect anything special. Now, we're not in 2021 anymore, and this is a new video. So let's talk about why the share price of Coinbase has been declining from that peak of $350. Why has it had such a tough few months? Well, the first thing to talk about is the fact that actually it has a really low PE. I think about 18 at the time of making this video, which is low for a normal company at the moment and really low for a tech company. The problem is that's based on its current high earnings, and the basic idea amongst institutional investors is that those high earnings are not sustainable. At the moment, Coinbase have a spread of about 0.5% on all trades, which is really high and makes them loads of money. As the market for crypto exchanges evolves, however, competition will drive this spread down, just like Robinhood drove down the values of commissions in stock trading. Basically, these high earnings that the company is seeing right now, they're not seen as sustainable in the future, so while current PEs are good, forward PEs are likely to be worse. Now, the second reason that I think the company is having a tough time is the fact that market consolidation will take place and people are going to be tending towards using just one app to trade cryptos and shares instead of two separate ones. Now, for this, I suspect quite a lot of you might disagree with me, but we're not talking about serious investors who pay lots of attention to the markets, because we make up a minority of investors these days. The vast majority of people just download an app like Robinhood, put a few £100 in it and buy some shares that they feel like. Now, these people are going to be more likely, in my opinion at least, to want one app where they can trade shares, options, and cryptos like Robinhood, rather than having a bunch of different apps for different types of trading. It's just a little bit simpler, and as long as the UI is good, which it is on these other companies, their competitors like Robinhood, then there really isn't going to be much of a problem. And as I just said, other brokerages are already poised to make the most of this market consolidation. Coinbase is behind the curve here. They only sell crypto, and I think they're only going to as well. And I think that this will start to show in their growth, and it's going to hurt them in the future. Now, the next reason for Coinbase's decline is that it's sort of seen as a minor proxy for crypto markets as a whole. Basically, as crypto does well, there are more traders drawn to the markets, there are more traders making trades, there's more volume, and there's more earnings for companies like Coinbase, so it gets a higher valuation. Crypto markets have, of course, been falling recently, so Coinbase was expected to fall with them, and it actually did. Now, this might seem to be a little bit irrational because the share price of Coinbase does seem to mirror the price of Bitcoin to actually an unexpected degree. But this does actually make sense when you think about it, and that's because Bitcoin and crypto markets as a whole are all about drawing new investors to the market, and that's what drives mainstream adoption and increasing prices. Now, with more traders, with more investors, that means more users for Coinbase, more income, more revenues, higher profits, better PEs, higher valuation. So we should expect Coinbase to mirror the crypto market to some extent. Now, the fourth reason, and similar to the one I just talked about, is the fact that Coinbase's success is actually very closely tied to the crypto markets, not just Coinbase's valuation. Now, a crypto bear market is here. We are in a bear market, that much is obvious. Crypto is basically proven to be a risk-on asset as well. It follows a very standard investor pattern regarding monetary tightening and interest rate rises. So outlook for Coinbase in 2022 is poor because the outlook for the crypto market in 2022 is poor as well. Those of you who watch all of my videos will have heard me talk time and time again about the correlation between crypto markets and the Nasdaq, and it's really quite uncanny how similar in behavior they are. As interest rates rise, we expect risk on assets to fall, which means we expect crypto markets to fall, and Coinbase is going to see tougher earnings, tougher performance. It's going to be harder for them to grow and everything because of that. Now, finally, we have the fact that Coinbase is a growing company. Now, it is cash flow positive. It does have plenty of cash in the bank, so it's not going to go bankrupt by any means if it can't raise new capital, but it is being chased by competitors with very deep pockets like Crypto.com and FTX, so Coinbase needs to spend lots of money to stay ahead of the curve. Let's also not forget that Coinbase is not even the market leader. It's still behind Binance as well, and while it has made huge strides in the US, it has struggled to make those same sort of strides in other developed markets. As monetary tightening comes in the US, but not just there, across the rest of the world as well, everything becomes more expensive and difficult for Coinbase Growth in particular. Releasing bonds or raising capital simply costs more money, and that means less growth in the future, that means less earnings in the future, that means a lower current valuation. So what we're seeing with this decline of Coinbase's valuation is a very natural process. Finally, with something that most investors might not consider, Coinbase used to be seen as the most legitimate exchange, and maybe it is still the most legitimate exchange, but it has had huge failings with customer service that has damaged their reputation. The company used to be the darling child of YouTuber hype men, but sentiment regarding the company, their actions, and their really poor customer service has not been positive for some time now. Now, at a very basic level, those are the reasons why investor outlook for the company has decreased, and that's why the share price has fallen. You might disagree with what I think about some of those points, but the point is that that's what the market thinks about those points, and that's why the valuation has fallen. Maybe you think in the future their earnings are going to increase, not decrease. Maybe their spread's going to increase, not decrease. Maybe that's what you think, but that's not what the market is pricing in. And that is it for the day. If you like these quick looks into specific companies, then let me know in the comments down below. I'm going to be trying and do more of them, maybe one a week. And we're going to be hosting voting for what companies to look at each week on the Patreon as well. Now that is it for the day. We will be back tomorrow, of course. If you enjoyed this video, then leave a like and a comment to bless the YouTube algorithm. If you want more content like this, then check out our Patreon and join our community of investors. You get access to our Discord, loads of exclusive content like insight into my portfolio and buy and sell alerts for all my own investments. But I will just quickly say to wait to join until the 1st of February or you will be double charged by Patreon. I'm sorry, it's just a policy of theirs. They always charge on the 1st of the month, and that's not something I can change. There's a link in the description to masterworks.io, a site that allows you to buy fractional shares of art from world famous artists like Banksy, which can be a great way to diversify your portfolio with non-market correlated assets. It's completely free to sign up, you don't have to buy anything, you don't have to hand over any card information, so if that sounds interesting, then make sure to check it out. There's also a link in the description to BLOCKFI, which will give you up to $250 in free Bitcoin when you use it. You can also get 9% interest on stablecoins like USDC, which is a far higher rate than you'll get from any savings account these days. Just make sure not to use Tether. Thank you all for the support. Thanks for watching. Stay stoic. Until next time.